Hi, this is Mike Swanson, Wall Street Window. I got a really special guest. I've got David Morgan, who runs the website silver-investor.com, and David is really the foremost expert on investing in silver and silver stocks in the world as far as I'm concerned. And, I've been buying both lately. So how you doing, David?
Doing quite well, Mike. Thank you.
Well, thanks for taking the time out of your busy schedule to talk to me and everyone else. Just curious, we've seen silver and gold, go into a bear market in 2011 and have several huge drops last year. And since December, they have gone up very well, the stocks have. But last week, we saw a sharp pullback, and I'm getting lots of people emailing me worried that this could all be a big start of another big crash, because we saw similar things happen in the past couple of years where we get a rally then a big decline. So just wondering, what do you think is going on?
Well, before I start, I'll use the adage I love, which is the market knows more than anybody. Excuse me. And I'm on the record, public and private, that the bottom is in. I stated that the bottom came on June 28th. 2013 on an intraday key reversal. Silver traded as low as 18.17 and closed that same day or over 20. And key reversals are called key for a reason. It's a new low, and then it closes at a higher high than the day before, and then this is certainly a very significant one. Gold did not make a key reversal on that day. It came close, but close doesn't count. And so I said, that's it. And I didn't say that's it on that day. I waited. So far I'm right, Mike. I mean, from June till now, we've got 7-8 months, and it's been about that. But the sell-off that we're experiencing as we're doing your interview does portend perhaps that those lows might be tested or whatever. I think, again, the bottom is in. However, there are other analysts out there using technical work that think that there'll be a new low established. In fact, I'm going to be on a slight debate with a gentleman later today on a webinar, and he's thinking that there's going to be a new low set. And again, I don't think so, but you could argue. Only the market knows. Regardless, I think if there is going to be a new low, I don't think it'll be significantly lower than what we've witnessed. This is definitely a buying range. So I think maybe we could talk about that if you wish.
Yeah, sure. I'd like to know what you think about why it is a buying range.
Anytime you can buy any commodity at the cost of production or under the cost of production, and you have time on your side, in other words, you're patient, you're going to do well. Now, the argument is, especially from the Austrian point of view, which I am an Austrian economist or type thinker, is that if you buy silver at 20 and it costs a primary silver producer 22 to produce it, all in cost, cash costs are almost meaningless, then you're buying at a 10% discount, and you don't have all the problems that a miner has. You don't have, weather, labor, geography, bureaucratic, all this stuff that goes into running a business, especially a mining company. You don't have any of those headaches. All you have, if you buy it and hold it, is maybe a slight storage problem, depending on how much you buy. So that is true of both the silver market and the gold market. Both the levels that we're at currently for silver and gold are at or slightly lower than the true cost of production of both those metals. So that's something, again. Now, will it go lower? Yes. Could it go lower? Yes. But it can't stay there indefinitely. If it stays there a significant amount of time, what happens is the market will clear, meaning that gold mines and silver mines will go out of business because they're not making a profit, and that squeezes the supply. And so there's less supply, and there's huge demand physically, especially coming from Asia. We can talk about that in a moment. And so the price will rise. So I think as long as you are aware of what I just said, patient, and use an approach that most investors that are good use, but most that are amateurs don't, and that's dollar cost averaging. Your professionals usually call it accumulation, and that's fine, no problem. I don't want to play a semantics or word game here. What I want to get across is that a big fund buying a silver stock or a gold stock or even the metal, they probably couldn't move too much, but in some of these smaller stocks, as you well know, Mike, they have to accumulate their position, because if they put their amount of money they want to invest in these smaller companies, they would move the stock significantly, because the buying pressure would be so great the stock would rocket up. So they accumulate a little bit until they build the position that they want. And this is what you, as a private investor, should adhere to, either on the stock side or on the metal side or both. So buy it over time. And, if you get a really big smashing in the metals, which is possible, again, I doubt it, then you might add more at that point in time. But to time the market's very difficult. I've had very good success on the long range view. I've called the tops all the way up, but I haven't caught the bottoms all the way down. I missed the one in the '08 crisis. I called it at 1250, and of course it went under 9 briefly. Although the physical market retail, you could only buy silver at 1350. But in the futures market, you could buy it under 9. I bought 3,000 ounce bars at the $9 level and sent them to a minting friend of mine that turned them into half-ounce silver rounds for me. Of course, I had to pay for that process, and that adds to the cost, obviously. But still, I bought silver all-in costs at, say, $9.70 per ounce versus people that couldn't afford or didn't know either one about buying it off the exchange or buying, commercial bars were paying, 30-40% premium to that and doing it. I mean, there was a lot of trading of silver going on during the bottom.
Yeah, it's really interesting to watch what is happening in the silver market. I know, like you're saying, both of them, silver and gold, are close to production costs or right around it. So it's hard to imagine that they could really go a whole lot lower. I frankly don't think it's going to happen. I think we're forming a base and we're going to take off sometime within the next couple of weeks or months and really start a new bull market, which would surprise everyone. And I've been saying that, but I'm also receiving lots of emails and from people who are sending me articles saying I'm wrong. I seem to be like one of the only people who think this. But one of the arguments that people have against it, or an argument for prices going lower, is a lot of people think that China, or they show that China has accumulated lots of precious metals, and for some reason people think that they're going to sell them sometime soon and cause another crash. What's your take on what's going on in China?
I really, really doubt that. The Chinese have very long-term views on everything. I mean, they still have top-down, management, if you want to call it that, from their political system, but so do we. Regardless, they usually take a viewpoint of, a generation, 2 generations, 3 generations out. So as far as I'm concerned, in studying that market rather closely and paying attention to the analysts that have more or less the inside track on the Chinese, is they know that gold is basically, the power money of the world. And they've been accumulating it both on an individual basis, the Chinese citizenry, and the main banking consortium of China. So I don't see any reason in the world that they would dump gold. If they have, economic problems, which certainly they're over leveraged like everybody else, you might see, problems in the real estate market. You might see retail retail issues. You might see a lot of things, but I don't think you're going to see dumping of gold. In fact, you might see more. Now, gold, as Casey says, and a lot of people don't really get this idea, doesn't make me right, doesn't make me wrong, but watch the market, because the market is the one you want to pay attention to. Gold's a crisis hedge. You always get, I'm not going to buy it because deflation, or inflation isn't high enough, or, and they have all these ideas surrounding gold. And you can find vast amount of articles about, it's reciprocal to the U.S. dollar. It's only good in inflation. I mean, you pick your why gold goes up de jour, whatever your flavor is of this week on why gold reacts the way it does. No, gold reacts for crisis reasons, or for uncertainty is actually a better term, I think. If you're uncertain whether the market's going up or down, or you're uncertain if housing is bottomed or not, or you're uncertain about your job prospects in the future, or you're uncertain about will you be able to afford retirement, or there's all this uncertainty, and that's gold. Gold is the most certain thing out there. Does that mean the price doesn't vary? No, it does not. But think about it. An ounce of gold is an ounce of gold. Its mass doesn't change anywhere in the universe forever and ever. So if there's nothing more constant than a metal disc of 1 ounce at 999 purity, it's solid, it doesn't change. It's a constant. So what changes? Perception. Is it, less valuable or more valuable relative to any given currency? And I don't think a lot of people that are, primarily in the U.S., from my experience, are a little naive about is that, gold's going down. Well, it might be going down in U.S. terms, but it might be going up in another currency. And they don't even think about that because they're so, centric on the 5% of the world's population controlling the world, which they don't, of course. I'm being light here, and I don't want to bring geopolitics into this unless you really want to, but we can. But, what's going on with the Ukraine situation and going on between China and Japan with these, I can't pronounce them, Suku Islands or however you pronounce it. And on and on and on it goes. So gold has a function that is not really totally dependent on the dollar or inflation or deflation. It's dependent on, I don't know what the future holds financially. I'm uncertain about it. That's the real impetus. And that takes place on a nation-state basis as well as an individual basis. And China's been saying, I'm uncertain about what these frickin' U.S. dollars are going to be worth in the, in our holdings, our bonds in the future. Therefore, we're going to hedge our bets. We're going to buy a lot of, real gold. And then one more point, because I'm, pretty well connected. I mean, I am. And the refineries in Switzerland, some of the largest gold refiners in the world, if not the largest, are taking a lot of gold that's coming through the Middle East and other areas, and re-refining it into 4/9 fine and kilo bars. And why? That's the Chinese standard. And they have told me that they're backed up to 2016. Does that sound like we have a lot of non-participation in the physical gold market? No, it sounds to me like they're going as fast as they can to get as much produced as they can. I'm stating it's being re-refined. But the demand side is so strong that they're booked up for all of 2014 and 2015. They're booked up for basically 2 years already because of Chinese demand to get this 4/9 fine kilo bars manufactured and sent over to them. Sounds to me like we got a bull market in physical gold and a bear market currently in paper gold.
Yeah, it makes a lot of sense to me. Well, as we wrap up, can you tell people where to go to get more information, what you can provide?
Absolutely. There's a lot of information for free. Probably the best and easiest is just to go to our YouTube channel, type in Silver Guru, and you can get these type of interviews that we put up on our YouTube channel. The other one is our Twitter feed, which is usually I put the YouTube stuff on Twitter, but not always. But what I do is every article that I read, I shouldn't say every article, of all the articles I read every day, I usually pick one or two that I think are so important that others should read them. So I send those out on our Twitter feed, and so do a couple of the analysts that work with me. So you may get, 2 or 3 tweets a day. And these are for people who really want to, follow the market closely or listen to an interview that I think is important or that type of thing. Lastly, you can come to the website, silver-investor.com. There is a free letter that's an e-report every weekend. It comes out on Saturday only. And we do some analysis and talk about what happened during the week. That's free. And then, of course, anyone that's serious about metals investing and resource investing, we don't just focus on silver, and probably should emphasize that more. We look at gold, of course. We look at the platinum and palladium markets, and those are our main function. But we've talked about copper, moly, lithium, zinc. We have a zinc company in the portfolio. We wrote a report on the zinc shortage, or supply squeeze might be better. I don't like to use the word shortage, but well in advance of a lot of the mainstream Wall Street analysts, and a few of them caught on about a year after us. So we were ahead on that. So there's things that we look at. If you're a resource investor or a precious metals investor, you might join for free. You can get our report, full access to the paid website for 30 days for free. And I don't think you can do much better than that, because after you've explored it, you can make a determination. Is it for me or is it not? And most of the time, people like to stick around, and a few times we'll get, it's not in my interest or it's over my head, which we don't try to write that way. I mean, even though myself and one of the main analysts with me both have finance degrees, that only helps our thinking, perhaps. And of course, all I'm saying is that, no, we try to write on a very rudimentary level and make it very clear. We want to be as clear and succinct as we possibly can, because, we work for you, the subscriber. So that's it.
Yeah, well, thanks for taking the time to talk to me and everyone else, and hopefully we'll do another interview in the future.
Appreciate the time, Mike. Thank you.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, You can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. SilverSaver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the SilverSaver program. SilverSaver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. SilverSaver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. SilverSaver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.